You're in Hong Kong at the Credit Suisse Asian Investment Conference, where one of the topics that we've been taking a closer look at is whether global trade imbalances and currency wars could possibly derail global GDP growth. And joining us now is Dr. Reddy, a former governor of the Reserve Bank of India. Dr. Reddy, thanks very much for joining us.
Thank you.
You were a panelist today on the discussion about global trade imbalances and currency wars. Tell us a little bit about the findings.
I think if I have to sum up what happened on a very complex subject, I think the consensus sort of was that some imbalance is inevitable. There will never be a perfect balance in the global economy. The problem arises only when there are excessive imbalances. So imbalance cannot be resolved, they have to be managed. And now there is an effort which is correct to correct excessive imbalances. That's on the imbalances side. And I think there is a recognition of the excessive imbalances. And each country is trying to correct its own space. And there are few countries which are globally very important, like USA or China. And the currency situation, the currency is one element. It's not as though the currency by itself determines either the balance or lack of balance. And increasingly, the exchange rate has to be in some way or other managed during times of uncertainties. And it was also felt that the developments in Japan as well as Middle East are likely to add to the uncertainties that already existed due to the post-crisis situation. So in a way, therefore, uncertainties and volatilities are likely to characterize both financial markets and the commodity market. At the same time, there is a general optimism, perhaps cautious but optimism, that the recovery will continue, though it may be uneven.
And exactly these sorts of uncertainties have brought it back to mind to investors the financial crises that we had in the past, in Russia, in Mexico, in Thailand, the currency crises. Tell us a little bit about how the situation has changed since then.
The situation has changed in the sense that in those days, essentially it was the developing countries which faced problems, partly because of their BOP, balance of payments issues. But now, much of the problems that are arising have arisen out of the financial sector of the advanced economies, who have taken some measures in that regard. So in a way, therefore, the developing economies have improved their macroeconomic strength, have got the reserves. So people are not expecting serious problems to arise in developing economies. People are looking to the type of issues that may come out of USA, China and Eurozone in the process of rebalancing of their economies and improvement in their financial sector that has been warranted by the crisis and its management.
You governed the Indian Reserve through the financial crisis. I mean, tell us from today's perspective, what are the points that need doing in the Indian capital market, in financial markets, in order to continue on the steady path?
See, India, compared to many other countries, India does not have macroeconomic imbalances. It does not depend too much on the rest of the world for its current account. It does not have too much of export concentration. So better macroeconomic balance. There is no imbalance at all in India. There's an advantage going forward. Second, India's financial sector is fairly strong. It may not be very efficient by some standards, but it's very strong. So those are the two advantages from which India is proceeding. And way ahead, therefore, they have to ensure that inflation is contained and the external sector does not subject itself to too much volatility, particularly because of capital outflows. So I think for India, the issue is avoiding problems in external sector and ensuring that the growth takes place without inflation. There are no structural problems as such.
Well, thanks very much for your time and enjoy the rest of the conference.
Thank you.
That was Dr. Reddy speaking from Hong Kong, Credit Suisse Asian Investment Conference.